What's up, everybody? This is Sunko, the Korean bro. Today is 2022. September, October, November, December. September 26th. Okay, let's read articles. Hmm. Hmm. Let me talk about something new before we go and read articles. I know that the war is about to happen. Hmm. Oh, not sure if it's gonna happen or not, but then what I know is that Russia uh, brought up the nuclear card, and then he also mm, uh, asked for people uh, to go work as an militants, and which is a big thing because it's something that has never happened before since World War II. So the big thing is happening. Uh, and it's gonna have a big influence on stock market as well. Not only the interest rate hike, but also geopolitical conflict and like the war, everything combined together. Um, it's gonna affect economy as a whole, and it's not gonna be a good thing. It's more like a bad thingy. We'll see. Okay. Okay, let's go through one by one. Should these three top performing mini caps be on your watch list? British pound plunges to new low as tax cuts spark concern. Will synthetic biology firm Amherst post net income in 2024? Comcast is an asset bonanza price chip. U.S. case against American Airlines and JetBlue has to court. Can Caterpillar claw higher in a falling market? Is Dave and Buster's immune to high inflation and lower spending? Hmm. This device makes creating voice memos easy. War in Ukraine to drag on global economy into 2023. Hmm. Okay. Let's first these, okay? Hmm. Should these three top performing meat caps be on your watch list? Meat caps? Analysts are optimistic about Targa Resources, but estimate could be slashed if a recession causes a lower energy demand. Chelsea, no, it's not Chelsea. It's a Carlisle company. It has a long history of profitability, which is a sign that's likely to continue. Still, Dynamics is straddling two opposing trends, which could result in either lower revenue or increased revenue. Hmm. In a familiar story, me caps Target Resources, Carsel companies, and Steel Dynamics, the largest components of the S&P 400 mid-cap index, all gapped down Friday along with the broader market. Mid-caps are traditionally classified as those with a market capitalizations between $2 billion and $10 billion, but all three exceed that level. In fact, Targa and Carsley have market caps above $13.1 billion, which is the minimum to be included in the large cap S&P 500. All three are larger than some S&P 500 components. Indexes don't automatically kick stocks out when their market caps become too large or too small. Instead, changes may come when they reconstitute at regular intervals throughout the year. Together, those three stocks comprise about 1.94% of the index. That's a far cry from the S&P 500, where the top three components, Apple, Microsoft, and Amazon, which together account for more than 16% of the index. Therefore, having an outsized effect on total performance. Have some characteristics of both large and small caps in that they're often more stable than smaller stocks, but can still have better upside potential than larger names. Targa, and costly companies. Mm. Still dynamics. So mid cap company is like different from S&P 500. S&P 500, like the one that you know, like Microsoft and Amazon, Nasdaq, which together account for like more than 16% of the index, therefore having an outsized effect on total performance. Mm. British pound plunges to new low as tax cuts spark concern. The British pound fell to all-time low against the US dollar early Monday after Treasury Chief Kawazi Kwanta pledged a sweeping package of tax cuts. Okay, from this sentence, I know that tax cuts uh, can possibly cause a tax cuts. Mm, mm, oh. British pound plunges because of tax cuts. British pound plunges because of tax cuts. Okay. Okay. Fueling concerns about the government's economic policy as the United Kingdom teeters toward recession. The pound fell as low as $1.0373, its lowest level since the desimilization of the currency in 1971, before rallying to above $1.08 in London early afternoon trading. The weakening currency piles pressure on the UK's new Conservative government, which has gambled that slashing taxes, increasing borrowing to compensate, will spur economic growth. Many economists says it's more likely to fuel already high inflation, push down the pound, and drive up the cost of UK government borrowing, fuel already high inflation. So this cause tax cut cause um, plunge of British pound and high inflation. Um, it's gonna uh, it's gonna push it even more. Uh, Despite mounting concern, the government dug in its heels Monday. We're not going to be commenting on daily market movements, said the Prime Minister's spokesman, Max Brand. This is a plan for the medium to long term. The British currency has lost more than 5% of its value against the dollar since Friday. So it has lost its value. It has lost its value, okay? When Courtney announced the UK's biggest tax cuts in 50 years. Wow, biggest tax cuts in 50 years. That's huge. The government plans to cut £45 billion in taxes, as well as spend billions to help consumers and businesses struggling with high energy bills that are driving a cost of living crisis. Cut £45 billion in taxes, as well as spend billions to help consumers and businesses struggling with high energy bills. They're driving a cost of living crisis. The combination has sparked investor concern about spiraling government debt. Are betting that lower taxes and reduced bureaucracy eventually will generate enough additional tax revenue to cover government spending. Economists suggest it is unlikely the gamble will pay off. Mm, it depends, I think, now on what the Bank of England does in response to Sterling's most recent fall. There's been this dramatic loss of confidence in the government's economic management, but now the ball is in the Bank of England's court. Okay, so something serious is happening, and there's a debate on tax cut. Is this is this a long term thingy? So this is a long term thingy. So is this should be allowed, or this this is not a good thing. So was this something that should be banned? Hmm. Will synthetic biology for Amherst post net income in 2024? Synthetic biology company has been growing revenue through sales of consumer products at the Sephora and through its ingredients line of business. No, next one, Comcast. Comcast is an asset bonanza priced to cheap. Comcast is an asset bonanza with 51% broadband footprint in the US. Comcast loses the cable TV customers, but gains on the broadband, streaming, and advertising business. Shares are trading at historic lows of 9 times forward earnings with 3.33% dividend yield. Global media and communication company Comcast stock is down minus 37% on the year and testing its pandemic lows, despite the cord cutting trend that is killing its legacy cable video TV business, losing customers in quarter second 2022. The company is still showing strong profits. It added 317,000 wireless lines in the quarter. Its cable businesses achieved the higher adjusted EBITDA margin on record. It's a leading broadband provider with a portfolio of top-notch content brands including NBC Universal Peacock, Telemundo, and Sky Studios. The company boasts 57 million customers between the US and Europe and continues to show moderate growth. Comcast. U.S. case against American Airlines and JetBlue has to court. The government's antitrust lawsuit against American Airlines and JetBlue begins Tuesday, and the outcome could determine how closely the Biden administration examines other airline deals, including JetBlue's pending attempt to buy Spirit Airlines. Hmm. Hmm. Okay. Next one. A war in Ukraine to drag on global economy into 2023. Russia's war in Ukraine and the lingering effects of the COVID-19 pandemic are dragging down global economic growth more than expected and driving up inflation that will stay high into next year. The Organization for Economic Cooperation Development said Monday in a darkening outlook. Okay, Russia's war in Ukraine. Okay, COVID-19 pandemic. Okay, and mm, uh, All these things are driving up inflation that will stay high into next year. Okay. The Paris-based organization projects worldwide growth to be a modest at 3% this year, before slowing further to just 2.2% next year, representing about $2.8 trillion in lost global output in 2023. The war in Ukraine has driven up food and energy prices worldwide, with Russia a key global energy and fertilizer supplier and both countries major exporters of grain for millions of people worldwide already facing hunger. Meanwhile, China's COVID-19 lockdowns have shuttered large parts of its economy. The war, the burden of high energy and food prices, as well as zero COVID-19 policies from China, mean that growth will be lower and inflation will be higher and more persistent. OECD Secretary General. Okay. The inflation and energy supply shock led the OECD to project annual economic growth to slow to around 1.5% in the United States this year and just 1.5% next year. The group expects the economy to grow 1.25% this year in the 19 countries using the euro currency, with risk of deeper declines in several European economies during the winter months and 0.3% in 2023. It noted the specter of energy shortage in Europe after Russia reduced supplies of natural gas needed to hit homes, generate electricity, and power factories. Shortages could send energy prices up worldwide and force businesses to ration, pushing many European countries into a recession next year, the OECD said. Growth in China is expected to drop to 3.2% this year, except in 2020 when the pandemic emerged. It will be the lowest growth rate in China since the 1970s. The group projected it would rise slightly to 4.7% next year. The OECD called for short-term help for people hurt the most by rising prices, further interest rate hikes by central banks, climate policies that follow countries' search for alternate energy sources, and international cooperation to strengthen food supplies. Short-term help for people hurt the most by rising prices. OECD called for short-term help for people hurt. Okay. Let's go to Yahoo Finance. Okay. Brutal bear market knocks 7 major stocks below $3 a share. Stocks mixed as fast fears. Currency turmoil persists. Pound plunges to an all-time low before pairing losses. Tech stocks face another 10% drop amid strong dollar. These weird economic times demand investor attention. It could get worse before it gets better. Core uses these two dividend stocks to protect his portfolio. Traders who just want to survive sit on $5 trillion cash pile. Social Security is slowly running out of money. Here's what you need to do to protect your retirement. Okay, let's first read this carefully. Tech stocks face another 10% drop or more as strong dollar hits profit. The great tech sell-off of 2022 is far from over as investors brace for earnings misses. They may spur a more than 10% plunge in the Nasdaq 100. More than two-thirds of 914 respondents in the MLIV poll survey think profits of the technology companies will disappoint the market throughout 2022. Firms including Alphabet Inc., Google are at risk of advertisers cutting spendings as the global economy struggles, while streaming services including Netflix face an exodus of price-sensitive subscribers, with consumers tightening their belts. The Nasdaq 100 is down about 31% so far this year, wiping trillions of dollars in market value. As investors reassess the post-pandemic value of many business models, interest rate hikes are hitting stocks and diminishing the value of their future earnings. Inflation is driving up cost, while the stronger dollar is weighing on profits and the threat of recession is growing. Retailers such as Amazon.com Inc. are finding some of their direct responses to the COVID-19 pandemic, such as massive investments in warehouses, workers to pack products in them, are coming back to bite them. Futures on the Nasdaq 100 fell 0.5% in Monday, trading as global risk assets extended their sell-off. Apple said it will raise the price of its App Store purchases across Asia and countries that use the euro as the value of foreign currencies collapsed relative to the dollar. Microsoft's corp lowered its forecast because of the currency strength in June. And in July, Sony Group Corp warned investors about the impact of the global economic slowdown, especially in Europe, and the adverse effects of the strong dollar on its financial results. The Bloomberg Dollar Index, which tracks Greenback's performance against 10 leading global currencies, has set new record since those announcements were made. Tax earnings are projected to lag the S&P 500 in the third and fourth quarters. Infotax earnings per share are estimated to fall 6.6% year over year in the third quarter, compared to a 3.2% gain for the overall S&P 500, according to Bloomberg Intelligence data. Meanwhile, retail and professional investors are also bearish on the metaverse. Respondents are somewhat more sanguine when it comes to their positioning. About a third said they plan to increase their exposure to tech stocks. Just under a third said they'd reduce it, and the rest said they'd hold steady over the next 6 months. Tech remains attractive on some metrics, such as the current price to earnings ratio compared to its 10-year average, while companies like Apple are still big cash generators, more generally hard to avoid tech. Anyway, the point is it's gonna face another 10% drop. It's gonna face another 10% drop. That is huge thing, right? Investors are getting a painful lesson in discontinuity. About the author, Larry Hathaway is the co-founder of Jackson's Hole Economics and the former chief economist of UBS. Casual observers of economics and financial markets often make a simple, if understandable, mistake. They assume continuity. They imagine economic or market variables, such as prices or quantities, change in smooth and predictable ways alongside variations in monetary and fiscal policy or shifts in business dynamics, altering investor household expectations and the like. Hmm. Mm, we got not many articles tonight. Mm. Okay, I'm going to read Lee this article for the last time, and that's it for today. Okay. Lee auto stock rises despite cut to delivery forecast. Three reasons for the move. Shares of Chinese electric vehicles makers could use some good news. Investors appear to think they have gotten some in an update from Li Auto. While the automaker lowered its forecast for deliveries this quarter, the stock rose in overseas trading. Monday, Li said it plans to deliver about 25,500 vehicles in the third quarter, but the midpoint of the range of the company forecast when it reported its second numbers were 28,000 vehicles. So the new call is live by 2,500 units. Li Auto is doing really well. It's a Chinese company. Uh, they're really doing well considering that we're having a hard time. I mean, interest rate hike and a COVID, all things combined, it's not so good. Mm. Anyway, this is it for today, and I'll see you guys tomorrow, okay?